What's good, YouTube? Welcome back to the Brown Gent. In today's video, Nano Dimensions, our favorite 3D printing company, they released their earnings on Monday. It's been quite a busy week for me with work and such, but I wanted to bring to you sort of what happened and what that means for us going forward. Before we get into it, if you haven't done so already, make sure that you like and share the video, subscribe to the channel, and follow me on Twitter. Now, with that being said, let's get into the video and talk a bit more about Nano Dimensions. So, Nano Dimensions stock has been doing okay. If we compare this relatively to the rest of the year, over the day, we're up 2.5% with the rest of the market. Over the last week, we've been trading flat. Over the last month, we're down 13%. Last 6 months, we're down 2%. But if you look at it since January 1st, 2023, we're actually up 22.8%. And this is a stock with incredible value that has a ton of liquidity that was locked up ever since Yoav Stern did all of those dilutions back when we were in the bull run of 2020 and 2021, where he locked up a ton of value for those shares. And we're going to cover that as well as their sort of Q2 or first half results. Okay, so just taking a look at this, on Monday they announced a revenue of $14.74 million for Q2 2023. That's pretty much very similar to what they made last time as well in Q1. The gross margin was once again 44%, which is consistent with the previous quarter as well. Don't worry about adjusted gross margin. But the thing you really have to focus on here is their adjusted EBITDA. So you might hear us talk about this as net loss. This is how they're talking about their net loss. It's $24 million. So despite making $14 million or almost $15 million in Q2, they had like $38 million worth of expenses, 13 of which were research and development. Obviously, that makes sense for a growing company, but in terms of for shareholders, we are looking to make sure that they have enough runway to keep the company afloat. Now, Yoav Stern's done a fantastic job in sort of rallying the board, being very specific on the companies they choose to acquire. But even beyond all of that, the thing that's most important is how many quarters do we have left if they keep burning money at this rate. Because what we want to see is profitable companies. Now, profitable companies take quite some time, and the best proxy that we have to measure that is, well, let's see how they're doing month to month or quarter over quarter. In this case, it's pretty much very similar. They had 47 million for the first half, which means it was 23 million last time, but I didn't have to look at it. So once again, still, they're not improving. That being said, if something fundamentally has changed and their earning or their power to create capital has increased while the costs have stayed flat, then that's positive. It's sort of hard to tell because a lot of times these reports are very like marketing speak. They want to speak good about the company because they want to incentivize people to hold on to their shares and in fact buy some more. So there was a CEO letter to the shareholders, and I think you would have all received this in the mail. Yoav Stern basically said Nano Dimensions momentum continues. The second quarter and first half of 2023 are no exception. Our financial results prove that the people initiatives, business plan, and merger and acquisition strategy we've put in place are delivering exceptional revenue and gross margin improvements. The 47% revenue growth organically since Q3 22 across different product lines is a testament to our unique and synergistic business model. When many, if not all, businesses in our space have top lines that are stagnating or declining, our revenues are growing 33% quarter over quarter, 38% half over half for 2023. They mentioned here their peers had to lower their prices to compete or pay more for their sort of inefficiently managed supply chain. Our gross profits are increasing up 81% from Q2 2022. Yeah, so I'm not looking at the comparison from last year. I'm looking at the comparison quarter over quarter. How are they doing? Like, let's not take into account seasonality, because there shouldn't be seasonality with 3D printing. So is your quarter one results sort of heading in the right direction for quarter two or not? In this case, it sort of stayed the same. So we're going to have to view Q3 to really have a better idea on whether or not what they're saying is actually accurate. We strongly believe this is only the beginning. We have the right people, tech, and products for the business to continue to deliver strong results. They're not focusing on quarterly results as good as they are, but rather looking at annual trends, aiming for improvements in margins and potentially a positive EBITDA and bottom line. So this is exactly what I was talking about. They want to focus on everything. So there's two ways that you can have a positive EBITDA. You can increase your revenue, or you can reduce your expenses. Either one of those levers will make you more profitable. Obviously, doing both will sort of improve or almost like escalate how fast this trajectory happens. Now, Yoav Stern is saying he's confident of the trajectory based on their strong R&D achievements, especially materials development, pipeline, and customer relations, as well as buildup of sales and marketing infrastructure. And don't get me wrong, I understand this is a tough business. They mentioned here, most of the 3D printing companies are not doing too well, having to reduce prices. It's sort of like a red ocean, right? Like everyone is competing with each other. And this is not a place that you want to be in, especially during a recessionary environment where capital is not sort of like just freely available, right? One of the things, it's not just located in, it's not just isolated to the US, it's pretty much all of these countries. So we've got to sort of be realistic with their revenues. And I get that, right? But like at the same time, I will always compare them to US companies because they are what I am majority investing in, right? I'm investing in companies like Tesla, like Apple, like Disney, like Nvidia, companies that are showing incredible growth, companies that are having incredible revenues. And that is exactly why you have to treat these companies like a startup, because startup companies don't have to be profitable. They have a lot of time to be profitable, right? It's like if you were to watch Dragon's Den. Are all those companies going to make it? Likely not. And it's a good time to remind you, remember, everything you hear here, everything that you hear here, I don't know why it sounds weird, it's not financial advice. I'm not your financial advisor. You got to do your own research. But for me, I don't have much of my portfolio allocated for speculative companies. I have it less than 20%. My biggest speculative holdings are Marathon Digital Holdings, Zomedica, and Nano Dimensions, right? I have other ones too, don't get me wrong, but they're very, very small. And all together, they make up less than 20% of my overall investment portfolio. So what Yoav Stern says here is their considerations for profitability and cash flow. They are going to continue investing in R&D and going to market strategies. Those are larger investments than what a company at our present size can typically afford, should it wish to be profitable in near-term quarters. However, they're growing steadily. Negative cash flows are temporary investments, which are meticulously calculated and aim to match the significant organic growth we expect and the upcoming consolidation waves that we foresee in our industry. So by this, they're imagining that a lot of these 3D printing companies are going to start collapsing in on each other. And I think Nano Dimensions is going to be there with their hands open, with all that cash they raised, sort of sitting here going, perfect, come here, we'll pay you X dollars, and they'll want a good deal. Yoav Stern has made it very clear he wants a good deal. He didn't want to get involved back in 2021, buying all these companies, getting involved in SPAC mania, as he called it, because he worked hard for that cash, put on the balance sheet of the company, and now that it's there, he's very frugal. And that's the kind of thing you want to see from a CEO. Very shrewd, very frugal, making sure he spends the money like he would were it his own. A lot of other CEOs, let me just say, would just be happy to make moves for perception's sake, get bonuses, get a golden parachute, and basically sell the company off to somebody else and be like, okay, cool, I'm done, I got my money. He sees incredible potential, and that's why he's choosing to focus on long-term value creation than just sort of the liquidation of the assets and becoming profitable or becoming rich as a result of it, right? That's what if he wanted to do that, he could let Murchison take over. But he truly believes that in their hands, in the board's hands, he can make himself, the board, and all the investors a ton of cash. So if we cut expenses and maximize profit now, an alternative that is definitely doable, we would be sacrificing a substantially increased valuation for the company down the road. Hence, investors with a different investment event horizon may join us by stretching their timeline slightly, and their expected returns will emerge. We are not where we are by accident, particularly the cash on our balance sheet was and is pre-planned. We are here because we have always expected our fiduciary responsibility to our shareholders, which has led us to spend your capital more prudently than others. Exactly. Sorry, I'm reading this for the first time, this little paragraph, but this is exactly what I just said. Fiduciary responsibility just basically means doing what is right for everyone, not thinking about the individual, but for the overall group. Our disciplined approach to capital allocation has enabled us to enter the next phase of the marketplace when capital is tight for many and fully execute on our strategic growth plans. Nano has the cash firepower to continue to build our business, and we see significant opportunities ahead, such as the acquisition we announced last week of UK-based additive flows technology and intellectual property, which covers solutions for 3D design simulation and optimization. There will only be a few leaders that emerge as dominating the digital manufacturing fields, and we are ideally positioned to act as a consolidator in the highly fragmented market landscape with numerous attractive potential targets. It's hard to imagine who is better positioned than we are. Very, very strong statement. So their performance is sort of covered here from 2020 to 2023. I'm not really worried about sort of reading this, and if you want to check it out, you can do it yourself. They do sort of mention again the whole Murchison potential takeover to remove 9 directors off the board, and basically, bring on their own people who have no strategic plan and no vision for Nano's future. They believe it's a blatant attempt to elevate the fund's profile as an activist on the account of Nano Dimensions and make a quick profit by gaining access to the company's significant cash reserves at the expense of substantial long-term value creation potential for other stakeholders. Murchison's effort to manipulate Nano stock with the help of collaborators has resulted in its cost base of $250 per share. The fund stands to generate an estimated 60% return 12 months by seeking to liquidate the company at $4 per share, and doing so would deprive you of the considerable upside as Nano continues to execute on its strategy. The now false claim of the cash value of $4 a share today should be the maximum value of the company in which to take it over, liquidate, and distribute will end up less than $4 per share to 170,000 retail shareholders. Most of those have a cost basis which is much higher than that. Yep, even myself, my cost basis is much higher than that. And they will be deprived of the opportunity to reach value, which is much more than $4 a share. And basically, they're calling it a predator scheme. So don't forget, they got tons of cash on their balance sheet currently, and Murchison wants to come on. Their nominees have all accepted inducement payments of $50,000 each to simply stand for election, a clear mechanism to buy their loyalty. And that's just something that we just want to be very, very clear on. So you can see here the financial results are written below. We've already covered this in the summary. Really, the net loss overall was $9.119 million. We're not looking at IPTA when we sort of talk about this. 4 cents a share compared to the net income of $22,000 or 9 cents income per share in the first quarter of 2023. So very, very important right here to see that big difference. It just means that the expenses were much higher in quarter 2 than quarter 1, right? And that is really for the Q2 right here, right? So total revenue second quarter were 14.7 mil, and that is 0.2 mil less than it was last quarter, but still significantly higher than it was last year. Cost of revenues was 8.18, R&D expenses was 60.36, sales and marketing 8.2 million, and general administrative expense 12.322 million. Balance sheet highlights: they've got $954 million worth of cash on their balance sheet. Shareholders' equity is 1.148. So that's reason this is important. If we go back to Nano Dimension stock, currently the market cap is 721 million. 1148 here would be like almost like a 1.6 times 2.85. 1.6 times 2.85. That gets us a projected share value of around $4.56. That's not a bad place to be. I think this is what the company's worth if everything else was sort of zero. And that means it's worth much more than this. 456 is sort of the baseline value just based on their shareholders' equity. If you took everything apart, right? Shareholders' equity is total assets minus total liabilities. I think a lot of people are sleeping on this, and there's a lot of potential here. So if you haven't gotten your shares in Nano Dimensions, I'm not saying that you should grab it, but it's not a bad idea. One of the other things we want to take a look at here is Nano Dimensions is sitting at 47 on the RSI, which is neither oversold or overbought, kind of neutral, but we're still on the lower end of the Bollinger Bands. So there is potential we will sort of rise up to a little higher, like $2.90 to $3. And we have seen a slight recovery since June when it was sitting at $2.17. We flipped to the other side at $3.34. And now we're sitting here kind of trading range bound in August between like 270 and 299, right? So this area right here. Now, that's relevant also because if you take a look at our indexes, the NASDAQ is down about 3.5% over the last month. So the S&P 500 is doing the same. So when I take a look at options, and just as a quick reminder, one of the things I always do with options is I will almost never buy options. The only time I buy options is I'm investing in a sort of laddering out strategy, which is what I did for Marathon Digital Holdings. And when I'm doing that, I will buy that looking out a couple of years. I do not buy weekly options otherwise. But one of the best ways that you can make money in the stock market, especially if you're buying, denominations of 100 shares each when you buy your investments, you can seriously consider selling calls or buying puts, right? By doing that, you are not sort of gambling. What you're doing is you know what? I'll just make another video explaining how to utilize options to maximize your returns in the stock market. It is not buying call options. Buying call options is a sucker's game. That's what gamblers do, because call options, in my opinion, are the short-term calls where you buy it hoping the price will go up by a certain amount, and you take away your biggest edge, which is time, right? The reality is I've been sitting on Nano Dimensions since 2021. I made a ton of money on it, but I've been sitting underwater since 2021. If these were call options, these would all be zero. Even my leaps would be dead. And I'm super glad I didn't touch any of those, right? So for me, it is just how do I continue to accumulate the companies that I strongly believe in and not make time an issue, because in the short term, so be it. It can go up and go down. In the long term, the things I believe in, I'm hoping to go up. Now, if you're looking at calls, looking to sell a call, the potential call that is not bad to sell here is the $5 call for January 17th, 2025. And there's a lot of open interest here, right? It expires January 17th, 2025, which is about 4 or 5 months away. But you get $25 for shares that are 285. That's about a 10%, almost a little less than 10% return, even if they don't hit. And if they hit, you'd sell your current shares for $5.25, right? $5 as the execute or the call price, and then $25 for the actual premium. So that's probably what I'd be looking at if I'm looking to sell calls right now. If you're looking to sell calls over the next week or two, it's not worth it. You get $5 for a $3 premium, for a $3 strike price. Not really worth it in my opinion. Anyways, if you haven't done already and you want to get support on your stocks, your cryptocurrencies, everything else, I have a free public Discord, Spades Investing, discord.thebrowngen.com. Also, consider joining our membership. We got channel supporters, investing prodigies, where I share sort of like all of my trades and everything else like that. Beyond that, thank you for watching. Make sure you follow me on Instagram. Make sure you follow me on Twitter. Like, subscribe, share the video. And with that being said, thanks again for watching, and I'll see you in the next video.